The bears were denied as the bulls continued to maintain 30,000 as the bottom. What is up, guys? Welcome back to the channel. My name is Kevin Svenson, and today we're going to be discussing the price of Bitcoin. So I'm looking at the 4-hour chart, and the story on the 4-hour chart is quite an interesting one. So we had the FUD news from the FBI. People thought that the FBI hacked the Bitcoin network because they were able to retrieve the Bitcoin from the ransomware attack on the Colonial Pipeline. That was fake news. What actually happened was that the FBI exploited sloppy password storage, right? So they didn't hack the Bitcoin network, they just found the passwords. So we had that initial FUD the other day, and Bitcoin immediately went from 36,400 all the way down to 31,000. And this FUD was countered by El Salvador. And El Salvador has officially made Bitcoin legal tender in their country. And we saw some immediate bullish speculation after that. So far, 30,000 is still the bottom, and the bulls are maintaining 30,000 as the bottom. This price action actually has more implications than you might think. If you're looking at the weekly chart, what this is doing here is it's actually allowing us to maintain the macro upward sloping trend line. This is the trend line that stems back to March of 2020 during the COVID-19 crash. We are currently still maintaining it as of right now. So what does this mean? What this means is that we are still maintaining the bull market narrative. We are seeing a sustained increase in price. And if Bitcoin bounces off of the macro trend line, upward sloping trend line, well, it is still technically, by definition, a bull market. It is only until Bitcoin breaks the trend and sees lower highs on the macro scale that it actually becomes, by definition, a bear market. So we are actually still maintaining the bull market trend. Despite what people tell you on social media, a bear market cannot only be 2 weeks to the downside. A bear market must be an extended period of lower prices, a macro downtrend. We are not seeing that. This is just a correction in what could be a bull market. And also something else that I find quite interesting right now for Bitcoin is if you go from swing low at 9,800 to swing high at 64,800, we see that Bitcoin just got almost a direct touch off of what? The 618 golden retrace. The golden retrace is currently our main support line. And for those of you that don't remember, in the previous bull market, the golden retrace was one of the most common places that we retraced to during the bull market. All right, so right now we're looking at 2017. This is when Bitcoin was breaking the previous all-time high of 1,200. Once we got the all-time high break, if you go from swing low to swing high, you can see that Bitcoin touched just around the 618 golden retrace on this pullback. Okay, so if you go from that swing low to this swing high, Bitcoin touched exactly the 618 golden retrace on the pullback. And not only that, guys, you can actually go over to 2019 and go from swing low to swing high, and we can see that the first major area of support that Bitcoin touched on this pullback was none other than the 618 golden retrace right here, right? So the 7,200 level was the golden retrace, and we saw the biggest pump in Bitcoin history right after touching that level. So the 618 golden retrace has always been a very key level for Bitcoin after major corrections. And here we are, once again, from 2020 going into 2021, pulling back to the 618 golden retrace as support. So it's kind of funny, right? How people have been FUDding Bitcoin saying, oh my God, it's over. Oh my God, we're doomed. But in reality, Bitcoin returning back to the 618 golden retrace is actually an extremely common retrace target. And again, just to remind you, it lines up perfectly with our macro support line. So this is technically a bull market, and 30,000 does remain as the bottom. Okay, so now let's talk about one of the main topics of discussion in terms of the Bitcoin chart, which is the impending death cross. We have the 50-day SMA about to cross below the 200-day SMA, and at this point, it seems almost inevitable to happen. It's likely going to happen. Of course, if we have enough velocity on this bounce, maybe we do avoid this. I guess that is a possibility, but it seems like it could happen. Now, I want to discuss the death cross. So this is something that a lot of people are worrying about, and a lot of people think that if we get the death cross, then all of a sudden we're just going to dump or something like that, right? This seems to be what people are expecting. But remember, the death cross is actually a lagging indicator. And there's many examples from the past to show that the death cross is not an immediate threat to price action. And sometimes it's not even a threat at all. All right, so let's take a look at the 2015 bear market and start from this point. And let's observe all the death crosses since 2015. So late 2015, we got a death cross. And this was actually one of the best buy points in Bitcoin history, the 50-day EMA cross below the 200. It was a confirmed death cross. And guess what, guys? You know, if you bought that death cross, you made thousands of % returns. So not necessarily the best signal that led us all the way into the 2017 bull market. And here we had the next death cross. Now this death cross was a bit of a fake out. It was a bit of a mix of results because right after this death cross, if you bought that signal, you actually made 50% returns, 45% returns to the upside from that point. Long term, it was reliable. Long term. Short term, it was not reliable. So let's move over to the next death cross area, which is right here. This death cross in 2019, if you had used it as a bearish signal, well, you missed out on the biggest pump, one of the biggest pumps in Bitcoin history at the time. At the time, it was the biggest pump in Bitcoin history, which took place right along this death cross. Short term, it was unreliable. Long term, it was, I guess kind of neutral because we ended up going above that price point later on. And we saw a golden cross, which was a fake out. So it was generally an unreliable signal. The next death cross was right here in 2020 after the COVID crash. If you took this as a bearish signal, well, guys, you missed out on an insanely profitable bull market, right? My point here is that throughout Bitcoin history, the death cross has been a lagging indicator. And sometimes the death cross has actually been a bottom signal. Sometimes the death cross actually leads into short-term pumps and even long-term recoveries. And sometimes it also does signal a longer-term downtrend, right? But my point here is that the results historically have been extremely mixed. It's never been a reliable signal. It's kind of like a wild card. You never really know what's coming with the death cross. For me right now, I'm just taking a look at the macro trends here with this upward sloping trend line. Overall, for me right now, I think that Bitcoin is still in a pretty good position now that we have defended the 30,000 level for now. And this trend line is a bull market trend line. This is part of our bullish narrative right now. And I also want to mention something. This is a tweet I put out yesterday. I said, people seem to be getting discouraged recently, but let's take a look at the big picture, shall we? Is it really that bad? Or could we still be on track? If we're looking at the stock to flow model, well, Bitcoin is generally on track with the previous cycle. Nearly 370 days after the halving, we had our first major dump, and we're looking to recover right now, hopefully. So we could still really be on track. Does this push back my prediction about the summertime being the bull market peak? It does. I believe that prediction will likely be proven wrong, and the peak of this bull market will come later, which maybe it's in the fall of this year, the winter, or even next year at this point is on the cards. Now that we have this new data of this multi-week dump, well, yeah, this could be an extended bull run. Though I wouldn't go as far as to say it's going to be some kind of super cycle. I just think maybe we're going to have a little bit longer consolidation before the next pump. And just to reiterate, as I've stated on this channel a million times, and it's still turning out to be a reliable signal for now. We got to close this weekly above 42,000 really to confirm this. But these volume spikes are generally very good market cycle bottom or market cycle top signals. Almost every time it lines up with a major punctuation in the end of a trend, whether it's a market top or market bottom, right? And those are the types of macro signals that I always look out for. Volume is actually extremely important for Bitcoin. Some people will say that, because there's OTC trading, volume is not important, but this is absolutely not true. The price of Bitcoin is set on exchanges, so you always want to be looking at those major volume levels. So yes, I do believe that this is a major market cycle low, and we will probably continue the bull market from here just based on my experience, based on my analysis, and based on probabilities. I would say that this is a market cycle low. So I hope you guys enjoyed this video. If you did, definitely hit that like button and subscribe to this channel if you're new. And if you want to support this channel further, be sure to join the Patreon. My Patreon members have access to a public portfolio that I started last year that has seen some massive success. And you guys can see in real time everything that I'm doing there. And also guys, the platform that you see me use in all of my videos on the screen here, This is the Cryptowatch platform. Be sure to click that link below and sign up for free, and I'll see you guys in the next video.